As of this month, every American child born between 2025 and 2028 already has $1,000 sitting in the stock market, courtesy of the federal government. Whether that money is actually invested and growing for your kid depends entirely on one form, and as of right now, most parents haven't filled it out. This video is for you if you have a kid, or you're planning to, and you keep seeing the words Trump account without a clear explanation of what it is. No opinions here on the politics of it, just the mechanics, what it is, who qualifies, how the money grows, and how it stacks up against the 529 or custodial account you might already have open. By the end, you'll know exactly what to check today. Chapter 1. What is a Trump account? The basic mechanics. A Trump account is a new type of tax-advantaged savings and investment account for kids under 18, created under Section 530A of the tax code. It works a lot like an IRA, except a parent or guardian manages it until the child turns 18. Here's the part most people miss. There are two separate things happening. First, there's the account itself, which any eligible child can have. Second, there's a one-time $1,000 seed deposit from the U.S. Treasury, which only goes to children born between January 1st, 2025 and December 31st, 2028, who are U.S. citizens with a valid Social Security number. If your child was born outside that window, they can still have a Trump account. They just don't get the automatic $1,000. There's no cost to open one. You do it through the Trump Accounts app or at TrumpAccounts.gov, and if you already filed IRS Form 4547 with your tax return to elect the account, you should be getting an activation email walking you through setup. As of early July, more than 6 million children have already been signed up. If you have a kid in that birth window and haven't checked yet, you are behind a lot of other parents on this. Not because you did anything wrong, just because the form isn't exactly common knowledge yet. Chapter 2. Who qualifies and how much you can contribute. Beyond the $1,000 seed deposit, here's what you're allowed to put in yourself. Parents, grandparents, friends, and other contributors can combine to add up to $5,000 a year in after-tax dollars, up until the year before the child turns 18. That number adjusts for inflation starting in 2027. Employers can also contribute up to $2,500 a year per employee's child, and that money doesn't count as taxable income to you. It still counts toward the same $5,000 annual cap, though. Over 50 companies, including Visa, Dell, and Comcast, have already committed to matching contributions for their employees' kids. If you work somewhere with a benefits package, it's worth checking whether this is now on the list. One more detail worth knowing. Charitable organizations and state or local governments can contribute on top of that $5,000 cap. Those contributions don't eat into your personal limit. Chapter 3. How the money grows, and what happens at 18. Until your child turns 18, the account is in what's called a growth period. During that stretch, the money has to be invested in low-cost mutual funds or ETFs, tracking a broad index like the S&P 500, with expense ratios under 0.1%. You're not picking individual stocks here. It's index investing. Full stop. On growth, the government's own projections estimate that a Trump account funded only with the initial $1,000 seed deposit with no other contributions could be worth around $5,800 to $6,000 by age 18. If a family contributes the full $5,000 a year on top of that, the same projections put the account closer to $300,000 by the time the child turns 18. Those numbers assume consistent market growth over time, which is never guaranteed. So treat them as a rough model, not a promise. Once your child turns 18, the account converts to operate like a traditional IRA. That means normal IRA rules apply going forward, including the tax treatment on withdrawals. Here's the nuance that gets missed. Because this operates like a traditional IRA, in some cases, families are looking at converting the funds inside, including the seed money and any employer or charitable contributions, into a Roth IRA down the line. That's a real tax planning strategy, but the specific rules on it are still being finalized, so don't act on that alone. Talk to a tax professional before making that move. Chapter 4. Trump account versus 529 versus custodial account versus Roth IRA. So where does this actually fit next to what you might already be using? A 529 plan is still the strongest option if you're saving specifically for education. The growth is tax-free as long as the money goes toward qualifying school expenses. A Trump account has no such restriction. the money can eventually go toward education, a first home, starting a business, or retirement. A custodial account, UGMA or UTMA, gives you full flexibility with no restrictions on how the money is used, but it's taxed differently and it counts as the child's asset when they apply for financial aid, which can work against them. A Roth IRA requires the child to have earned income, so it's not an option for a 5-year-old. A Trump account has no earned income requirement, which is exactly why it exists, to get money invested for kids before they're old enough to work. None of these cancel each other out. For a lot of families, the realistic answer is a Trump account for the free seed money and employer match, alongside a 529 if college is the priority. 4 things to remember. 1. A Trump account is a new IRA-style account for kids under 18. 2. Kids born 2025 through 2028 get a one-time $1,000 federal deposit, and everyone can contribute up to $5,000 a year on top of that. 3. The money is required to sit in low-cost index funds until age 18. Then the account converts to a normal IRA. 4. This doesn't replace a 529 or custodial account. It sits alongside them depending on what you're actually saving for. The one thing to do today, pull up TrumpAccounts.gov or the Trump Accounts app and check your child's eligibility status, even if you're not sure you filed the form. Drop a comment. Are you opening one of these for your kid or sticking with what you already have set up? If this helped make sense of it, subscribe. Every Monday we take one financial topic like this and break it down the same way.